So let's talk about why we like term life insurance. I think there's two answers to that question, and you already alluded to it. It's inexpensive, right? We want to get as big of a death benefit as we can for as little of a premium cost. So when you talk about these cash value policies, you're going to be paying more than the premium. You're going to be putting money in, obviously, to build the cash value. We believe let the money for insurance be the money for insurance, and the money for investing be the money for investing. So there's a cost effectiveness to it. I think the other part of it is the reason we like term is unless there is a need or a desire in retirement to leave a life insurance death benefit behind, there's not likely a need in the general planning process. Once you reach retirement, if you've done everything that your written plan has detailed for you to do and you achieve true financial independence, your assets self-fund those you leave behind.
Scott, there are some exceptions to this, but let's say in a general rule, a life insurance policy is for when you don't have enough money for those things to happen. Once you become financially independent, then the need for life insurance greatly decreases or could in fact go away. Now, again, there are some exceptions to that rule, but that is generally the way that I think most people approach it. Typically, when you're talking about this type of life insurance, you're talking about a young family who have kids, they have a house mortgage, they may have some debt, all of the things of life are big demands on your income. And that goes for the husband or the wife. The wife provides great amount of work and services at home that you'd frankly have to go pay for if something happened to her. Mm-hmm. So clearly, a life insurance policy is something that you depend on. It is something that you have a need for, and really is something that needs to be bought outside of work and allow the benefit that you have at work to be either an add-on or to be part of your overall plan.
Yeah, so that was the one part of Chris's question, was that his wife stays home with the kids, but there is some value in addressing what kind of life insurance need your wife has as well. Even though it's not an income that you would be replacing, there would be a cost in keeping the kids, in watching the kids, house maintenance, anything that she does. She's still got a job, right? She may not be getting a paycheck from an employer for it, but she is definitely providing some value to that home that needs to be looked at in terms of how would it be replaced if she was to lose her life. Now, I think that really highlights, we don't know how old Chris and his wife are, but let's say they're 30, then that kind of is an example that you'd probably be looking at if they're, let's say 35 and they want to retire at 65, building that retirement income plan now, even though they're 30 years away from their projected retirement. That shows you the value in it, is because they would likely only need a 30-year term policy to get them to retirement, because they would also be saving and investing and be able to reach financial independence at age 65.
Scott, our production team just told me that our segment, your segment on Yahoo Finance, is actually, the link to that is in our live stream comments. Awesome. So if you're watching on the live stream, or if you're watching on YouTube, you can go down in the comments and click on the link there after the show, and you can take a look at Scott's appearance on Yahoo Finance.
And if you've got questions for us on the Get Ready for the Future show, we've got a number to take down, 501-381-5228. Again, it's 501-381-5228. Now, that serves as both a way to text us a question, or you can call that number and leave a voicemail, and we'll play your question on the air.